Those earnings numbers that I just laid out, they are huge. And again, there's going to be a lot of, well, it's COVID lockdowns. As I pointed out, COVID really only began to hit the country in the last week or two of March of last year, and it took other countries and other states longer to do that. Those are absolutely stunning numbers, but the market's not reacting that much. Why do you think not?
I wouldn't be too concerned about it. Earnings are coming in. Everybody's kind of looking for that. Oh, by the way, good morning, Brian. It's good to see you again. But earnings are coming in very, very strong. The market's the economy's reopening at a terrific pace. I mean, this is pretty exciting stuff, what's going on. Everywhere I go, it's packed anymore. My wife and I, we go to buy a bicycle the other day. It's like a 4-month wait. And the earnings are kicking in. The market's going to kick back in. I think we're setting up for a really, really pretty happy summer with the economy reopening, and the stock market, I think, is very, very, very healthy right now.
Yeah, I mean, listen, man, I was in Virginia this weekend. I drove back. The interstate was packed. I mean, it was 45 miles an hour traffic jams in the middle of nowhere. That said, has the market run, the big run that we had the last 6 to 9 months, is that reflected in these numbers? In other words, as we talk about, the smart money bought the, quote, reopen 9 months ago.
Well, for a stock or an ETF or an index, it has to make new highs to double. And I think that's what you're seeing now. But, just because the market's taking a little Spanish pause for a couple of weeks doesn't mean this bull market's by any way slowing down. Our proprietary indicator, the HCM byline, is incredibly strong. That means there's a lot of interest in this market. But, one thing, Brian, that we are seeing is the money spreading out. Last year was tech. But this year, you're starting to see the big epicenter stocks, the dividend stocks come back strong. This is a great market. One thing we're watching is the small caps are starting to rally now. They've kind of dipped back a little bit, and they're rallying. The convertible bonds dipped back, but now they're rallying back up. We see opportunity just all over the place.
Yeah, the Russell 2000, to your point, small caps, they had this big run. Then they kind of came back down, as Tom Lee of others have talked about. Is this related to the price of oil? Is this related to sort of more concerns about how fast certain states would reopen? It sounds like you are a believer in the small caps. Any pullback might be a buying opportunity.
I think the whole market of pullback is a buying opportunity. But when you look at the FANGs are starting to come alive too. With Facebook and Amazon have been basing for 9 months, and they're building up steam just like a pressure cooker. And I tell you, both of those, in our opinion, look like they're about ready to break out. When they do, I think it's going to push the NASDAQ higher in the FANGs higher. There's opportunity everywhere. And again, oil and gas prices, you can look at oil, it's starting to rally based upon the economy reopening. Man, yeah. I just think this economy is going to reopen at just a fast pace.
Very quickly, I know you like some dividend ETFs. Give us a couple of names. 20 seconds, please, Vance.
Well, I would, if I was an individual investor, I'd look at DVY or VYM. I'd just play it by an ETF. I think you get just as much bang for the buck doing it that way. Then you spread around your money, and you're definitely going to capture, some profitable trades inside of those ETFs. I think there's a lot of opportunity there.
Shepard Smith here. Thanks for watching CNBC on YouTube.